Hey guys, Josh Parrington here, Portable Restroom Trailers. We have the unique experience this Sunday afternoon to have nationally recognized John Hyre, tax attorney, small business advisor, and most importantly, even real estate investor slash advisor as well. John, if you would, one, thank you for being here with us. And two, would you just kind of tell us a little bit about yourself really quick?
Sure. I'm a tax lawyer as my primary profession. I'm also an accountant, so I have two firms. One does tax returns and that kind of work, and then one of them sues the IRS, which is actually a whole lot of fun. I mean, a lot of people think taxes are boring, but when you get to attack the IRS, I'm really all for it. And then we also have some small businesses of our own, mostly in the real estate field. So we're pretty eclectic.
Definitely. And so where are you actually out of then, John? Are you in the Ohio area?
Physically, I'm in Columbus, Ohio. Our client base is nationwide. I'd say we have clients now in about 35 states. I do travel and speak a lot. That's how we ended up getting clients everywhere. We try to take a different approach to taxes. A, we try to make it a little bit less dull, and B, we actually think. So we do a lot of research. We think about what are some things clients can do that your normal accountant won't tell the client or just doesn't know or understand to tell the client. And that's kind of what our niche is. So we like it. Anything that involves legally and ethically sticking it to the government, but always legally and ethically using their own rules, I'm all for.
Well, and that's why we wanted you on this call today, because we've got this thing out there called Section 179 that is absolutely, it's a massive deduction that I've noticed a lot of my clients have no clue even exists. And here we are almost at the deadline, the end of the year, and they may find themselves in a position where they may miss out on this deduction. And so we wanted you on the call to kind of tell us what the heck is Section 179 and how can, one of our small business clients be able to use it at Portable Restroom Trailers.
All right, let me explain the baseline, and then 179 will make more sense. Normally, when you buy a large asset, it could be a computer, it could be a car, it could be a portable restroom trailer, all sorts of assets. Normally, you depreciate them. What that means is you get to write off a little bit every year for a few years, usually 5 to 10 years. 179 just says you can write it off all in 1 year. So if you're looking for a big write-off towards the year end, you buy a piece of equipment that you could use in your business, and that's on purpose. The government encourages people, it wants them to be out investing in capital equipment, and so it's something you normally couldn't write off. 179 says you can write it off, so you could take the deduction on your return.
That's fantastic. So, John, is there a limit to how much somebody can write off?
Yeah, it's kind of up in the air right now. Let me give you a range. Congress did not change the law so that it's written in a really weird way, which is what you would expect from Congress. They can't ever do anything in a commonsensical manner. They have to rewrite the law at the end of every year or it resets to a default. And right now it's reset at a default. You can write off 25 grand in 1 year right now. Now typically they play chicken and at the last minute they change that number to something bigger, but we don't know if they're going to do it, and they got to do it before January 31st to do us any good. So right now the number is you can write off 25 grand a year. More typically, they've set it around 250 grand a year that you can write off. And there are a couple of requirements. You have to be in business, so we assume that restroom trailers are not your hobby. You don't have one in the backyard and the kids play in it and climb on it and all that sort of thing. You actually use it to make money in an active business that you run. You also have to be a quote-unquote small business. The way they measure that this year is you bought 250 grand or less of this kind of equipment in a year. And again, that number is usually a lot bigger. Oftentimes before year end, they'll switch over to 2 million and say, all right, if you bought less than 2 million of this kind of equipment during the year, we're going to let you write off up to 250. But for the moment, the number is you bought less than 250 during the year total, and you can only take up to 25 grand. So we'll see if they change it at the last minute or not.
That's fantastic. So, John, really quick, if somebody say buys a piece of equipment, we'll call it a portable restroom trailers because that's what we're really here for today. Say they bought one for $25,000. They did not pay cash. They actually financed it. Would they still be able to use that Section 179 deduction on it?
Yeah, in the tax world, when it comes to buying things, financing is usually the same as cash, unless there's some monkey business where the financing isn't really there or somebody played with it. But your lines of credit, your credit card, financing from most of the companies. So, like, I go to Lowe's and buy something, that usually qualifies. So, likewise, if I get owner financing at the level of the seller, usually that'll qualify. So, yeah, financing most of the time is just like cash.
That's great. So can we just maybe we can run through an example, and the numbers don't have to be exact because I understand everybody's going to be different and tax brackets are going to be different. But say I have a client who owns a winery, and maybe they want an extra trailer unit on this winery that they actually operate for business. So people come and they produce wine, they sell it, and they hold events there. So say somebody buys the trailer, the winery buys the trailer and they use the Section 179, how would it affect that person? So say it's a $25,000 or $28,000 trailer. At the end of the year, kind of net cost after taxes. How would that affect that winery, just kind of broad scope wise?
Okay, let's say it was 29 grand. They can write off 25 grand. So 4 grand gets depreciated. Let's just say it depreciates at 1,000 a year. It's an easy number, so I'll use that one. So the $4,000 portion of the 29, they're going to get a $1,000 write-off. The rest of it, they get a $25,000 write-off. So 1 plus 25 is 26, $26,000 write-off. Now they need to multiply it by their tax bracket. So let's say they're in a 30% tax bracket. They're looking at roughly just shy of $9,000 in terms of the taxes saved.
So
So if you
that's true.
subtract 9,000 from the 26 grand, that's their true cost after tax. Now, it's important to remember you do have to be paying taxes for this to work. You can't go negative, right? So if your taxable income was already, let's say, -10, you just had a bad year, this won't really help you that year. But if you're showing 30,000 of income or 100,000 of income, you've got enough that you could make this subtraction and it would save you real money.
Yeah, that's a $9,000 worth of true tax savings. That if you had taxable income above that, this is it's essentially money in your pocket. So it brings that net cost down to right around $19,000 to $20,000, something like that, I guess.
Well, it's that or give it to Uncle Sam, and whatever they do with it, you're not going to like it.
That's exactly right. That's exactly right. So what are the downfalls? What would a downfall of Section 179 be? Some people, when I talk with them on the phone, they say, well, it sounds too good to be true. And ultimately, a lot of things sound too good to be true before we're actually educated on it and provided the right information.
Well, if you ever sell the property later, whatever money you get is all taxable gain, right? So if you buy it for 25 and you sell it a year later for, I don't know, these things I assume depreciate, appreciate, how do they work?
They're kind of depending on the model they get. I mean, everything when we buy it, unless it's real estate, it's going to depreciate in some
Right.
fashion.
All right, so let's say you buy it for 25 grand, you write off 25 grand, and a year or two later you sell it for 20. You're going to show all 20 as income. So you got to remember that when you get rid of the thing. Otherwise, I don't know that there's a downside. I mean, there are various requirements. It can get a little bit complicated. You do have to buy it this year for it to count this year. You do have to pay for it cash or some sort of financing. You have to be in a trade or business that involves this. Now, it doesn't have to be a trade or business of dealing in the trailers. Like, I think your example was a good one, the winery, because people come in, they insert liquid, and then the liquid comes out a little bit later, and so they need to have this on their property. So they're in a trade or business as a winery. Now, if the winery were just a hobby, it's just a family thing they do, and they like to go out and drink, and instead of drinking other people's stuff, they like to drink their own, then you wouldn't be able to write it off because it's just a hobby. So it does have to involve a business.
That makes sense. Yeah, that definitely makes sense. Okay, great. So actually, it kind of brings me to one of our last questions. So we actually have an incentive opening up December 1st where somebody could actually purchase one of our trailers and have no payments for the first 90 days, which we've never done before. It's the first time ever at Portable Restroom Trailers. We've never offered anything like that before. So if somebody were to purchase one of our trailers, maybe they put their 1 month down payment, and they don't make any other payments for the next 90 days, but they take possession of this trailer before December 31st. or January 1st, really, all things, being equal, and they have a true business, they could actually still, be able to take advantage of this write-off then before the end of the year. Is that correct?
Should be. Let me ask you a technical question that I don't know about how these work. How do you transfer them? Do they have just a bill of sale, or is there an actual title? How does that work?
Yep, there's an actual title. So there's a bill of sale first, and then they'll receive an actual title, and then they'll register it just like they would, say, a normal vehicle.
So you need to have payment and ideally the transfer of title as well before the end of the year. Certainly the payment and ideally the transfer of title. We've been able to negotiate with the IRS sometimes where title might have transferred a few days later, and usually we're able to get them to accept it in these situations, but not always. They can be a little persnickety about that. So ideally the title will transfer before year end as well.
That's great. Yeah, this is a fantastic opportunity. I wish we would have had an opportunity between you and I to maybe do this a couple months ago to help some of our clients, but there's a big push towards the end of the year, just to make sure that these people are able to take advantage of, one of the few government bailouts that I feel like, anyways, a small business is able to get. That's kind of how I view this. Do you view it kind of the same way?
Yeah, you know what? The law gives you advantages. You got to use them. We don't lobby as well as the banks, so our advantages aren't quite as big, but we got to take the ones we can get. And I would say this, you could have mentioned it to your clients in June, but I deal with entrepreneurs nationwide, and let me tell you what, they all put this sort of thinking off till the very last minute. So I think your timing's actually pretty good.
Okay, great. Well, that's good to hear. And John, last thing, do you take on new clients, and can they be out of state? The reason I ask that is this can be pretty confusing for the average person, and some of our clients could definitely use your services. Do you have an open book?
Yeah, let me give a website and a phone number. I mean, we are taking clients both for the accounting side, so helping with bookkeeping, doing returns, and also the legal side, which is more the planning, and hopefully you don't get in a fight with the IRS, but if you do, we help people win those fights. That's my favorite part, by the way. I absolutely love fighting in general, and those people in particular. So what we're really proud of is we're pretty aggressive with the code. There's a lot in there that's gray, and we try and use it in your advantage. Now, we don't ever want to break the law. We don't ever want to lie to the IRS. We don't ever want to do something that falls outside the lines. But where the lines are unclear, we want to do what favors our client. So if you're looking to get a hold of us, we can be found at realestatetaxlaw.com, realestatetaxlaw.com, and I think that actually transfers to two websites, realestatetaxaccounting.com and IRAlawyer.com. I do a lot of IRA and 401k work, self-directed work. Somebody, by the way, this was totally something you did not plan on discussing in the call. Somebody could buy a portable restroom trailer in an IRA or in a 401k and turn around and rent it out.
Really?
Yep, you can do that. I mean, you can buy all kinds of stuff in your IRAs and 401ks. We have clients who buy real estate. We have a client who bought a cow. Actually, I shouldn't say a cow. It was a bull, a stud bull, and so on. So you can buy all kinds of interesting things in your IRAs. But I digress. That's kind of what I do. I get really excited about this stuff. The phone number is 800-762-3290. That's 800-762-3290. And the website's realestatetaxlaw.com. And we do a lot more than real estate, but that is one of our primary areas of focus.
Okay, that's awesome. And what I'll end up doing, too, for all of you that are listening in, if you just watch the description field below, I'll make sure that all of his contact information is listed there as well. And feel free to tell him Portable Restroom Trailers sent you. Guys, we're super excited to have you on. And John, that's actually a really good, I think, topic of conversation. Maybe we'll do another quick 5 or 10 minute hangout at some point in the future and talk about how we can use an IRA or a 401 to be able to fund some of these portable restroom trailer type purchases, because I too get excited about that, and I would much rather find ways to get creative and help our clients use maybe even other people's money to become wealthy themselves. So I definitely super excited that you were here for us today. And any last parting words for us?
Glad to be here. It's Sunday afternoon. Time to drink and eat.
That's exactly right. Well, happy Thanksgiving to you and your family.
Thanks, you too.
And definitely appreciate you taking time out.
Take care.
All right, bye-bye.